Please join me, though, in making welcome Bryn O'Brien, the Executive Director of the Australasian Centre for Corporate Responsibility.
Hi everyone, thanks for having me. I want to acknowledge, of course, the Wurundjeri people of the Kulin Nation and pay my respects to their elders past, present and emerging. And also to acknowledge the struggles of Aboriginal and Torres Strait Islander people in Australia for climate and environment and social justice over the years. An ongoing one, which I will address a little bit today in this presentation. So probably an unusual presentation and different to the ones that you've heard so far today. So I'll start out by giving you a little bit of an understanding of what ACCR, Australasian Centre for Corporate Responsibility, does. So we're a small philanthropically funded NGO. We have strategic shareholdings in ASX listed companies, so large companies listed on the Australian Stock Exchange. And we hold those shares for the purpose of engaging with companies around their environmental, social and governance performance. So what I want to talk to you today is less about the substance of the climate emergency. There are far more expert people in the room and elsewhere on that topic, but more about a tool that we have developed over the last few years and that we have used when we're dealing with corporations who are responsible through their direct activities and also through their funding of industry lobbyists, the fossil fuels lobbyists that have one purpose, and that is slowing our transition to a low carbon economy. So one of the tools that we have used over the past couple of years, which has been very effective in making companies accountable for their role in harming the environment, increasing emissions, and in slowing our transition. So I want to introduce you to these guys. I don't know why they're holding pencils, but here we are. They look like a bunch of dance teachers, I think, holding pencils. But anyway, that's us. We're all very svelte dance teachers holding pencils. I want to start to introduce us to the idea that we actually, we as a society, we as a community, because of the structure, the unique structure of the Australian economy, we actually have a whole heap of power in relation to the way corporations function in our society, especially where they are large companies that are listed on the stock exchange, and I'll tell you a little bit more about that, but that's us. So $2.6 trillion, and I apologise for the white on yellow, I hope that's not too difficult to see. $2.6 trillion is the amount of money in the Australian superannuation sector. That capital has been accumulated since the 70s and 80s, and it's been accumulated very, very quickly. So $2.6 trillion, for context, makes Australia the fourth or almost the third, and on the cusp of being the third largest pension fund economy in the world. So we're very, very, very big. That is a lot of money. And for further context, $1.9 trillion, that's the value of the entire Australian Stock Exchange. So there's more money in super. So super funds in Australia can't just invest in Australian listed equities. They need to go and invest in global equities or infrastructure or private equity. That is the value of the total publicly listed equities in Australia. So the super sector is much bigger. So this is what I mean when I say the unique structure of the Australian economy. So like it or not, where superannuation funds are investing in Australian equities, then we are all, if you have a superannuation fund, and if it's a mainstream fund, how many of you, or can you raise your hand if you have an ethical identified super fund? Okay, I'm talking to a specific audience here then, but even within the ethical funds, you will find there is some exposure usually to companies that are large emitters, even if they're not large fossil fuels producers. So I'll start out, and I want to leave a lot of time for questions if I can, and I hope that that people are willing to ask them. But I'll talk about superannuation capital a little bit as civic power. And I'll do that through reference to a case study. So this slide shows a little bit about how the carbon lobby works in Australia, and how the carbon lobby relates to Australian corporations. So in the bottom right-hand corner, and I'm unhelpfully standing in front of that, but we have BHP and Rio Tinto, two of the largest mining companies, not only in Australia but in the world, both of which are listed on the Australian Stock Exchange as well as the London Stock Exchange. And then in the top left-hand kind of part of the slide, we have the carbon lobby. So the Minerals Council of Australia, very influential lobby group who have had a role over the last decade in particular in undermining Australia's ability to have sensible public policy on climate change. The World Coal Association, who have played that role globally, also headed by an Australian. The US Chamber of Commerce. Now, these are the guys that were responsible in large part for Trump exiting the Paris Agreement. The New South Wales Minerals Council and the Queensland Resources Council, who keep repeating these ideas around coal being the economic future and the energy future for Australia. Now, it's in the rational self-interest of these guys to slow our transition to a low-carbon economy. It's not in the rational self-interest of these guys down here, BHP and Rio Tinto. BHP and Rio Tinto are two of the largest funders of these organisations. Certainly they are the two largest funders of the Minerals Council of Australia. Both Rio Tinto and BHP, regardless of what you think of the mining industry, BHP and Rio Tinto have an interest in reducing emissions. They have large-scale physical assets that exist all over the world that are vulnerable to climate change. They operate in communities that are vulnerable to climate change, and they also use a heap of energy. So energy policy instability in this country is acutely misaligned with the interests of these companies. So mid-last year, we at ACCR had a look at this kind of policy conflict, and we began an engagement process with BHP and Rio Tinto and their investors or their shareholders, many of which are major super funds, to demonstrate this misalignment and to hold them to account for it. Because we think, our theory is, if these guys don't have money, they're going to have less influence, or they're not going to have any influence. A whole heap of their influence relies on being super well funded. So, in a roundabout way, BHP and Rio Tinto are owned by us. And what I mean by that is BHP and Rio Tinto are owned by, and this is not an exhaustive list, but they're owned in large part, at least sort of 20 to 30% of their ownership structure is Australian industry superannuation funds. So I've listed a few across the bottom: Vic Super, UniSuper, Lucref Super, Australian Super, Hester and CBAS. So superannuation funds that are known to all of us and who represent us. And of course the interests of superannuation fund members are not quarterly returns. The interests of superannuation fund members are not even 5-year medium-term horizons. The interests of superannuation fund members are borne out over 30 to 40-year working lives. And so it's an interesting question for a superannuation fund. So when we see multiple layers of misalignment here, we see misalignment between the interests of the company and the interests of the trade associations, which are going out and arguing that we should, dig up all of the coal out of the ground and burn it right now and make a whole heap of money. So that's misaligned not only with those companies, but very, very misaligned. It's a very stark misalignment with the interests of their shareholders. And this is the kind of, we say, the sort of broken middle space that ACCR plays in and aims to leverage. So so when we talk about, and if I should go back here, when we talk about superannuation capital as civic power, we all have relationships with superannuation funds and we can pursue
conversations with our funds about their investment decisions. And superannuation funds need to listen to their members about their investment decisions. The spectrum of, or the types of investment policy drivers that funds can have include divestment, which we're all familiar with, fossil fuels divestment. That's not what ACCR does. It's a very effective tool, and we believe that our work is complementary to a divestment mandate. There's also putting money in good places, which is sometimes called impact investing or carbon neutral investing, finding those if you're pulling money out of a bad or emissions intensive investment, where are you going to put it? And then there's this third space, which is called engagement, and that's where ACCR works. So we hold shares in these large companies, we engage with those companies about their performance and about their decision making, about their capital allocation. And then we engage with the investors of those companies, because we on average own about $1,000 in each of these companies. So we're not a particularly credible investor, one might say, but we have conversations with credible investors. In fact, just 2 weeks ago, I had 1 day of meetings in Melbourne, and I hit investors with $500 billion of funds under management in 1 day. So there's this enormous concentration, particularly in Melbourne, of superannuation capital. So engaging with superannuation funds is really, really important. And so if you hold, or if you have superannuation accounts with investors that are not doing these really hardcore screens, that are more on the engagement side, so reaching out to companies and helping them improve their practices, or dragging them along to improve their practices, then that's a really valuable thing that you can do. But there's this other curious quirk of Australian corporations law, which ACCR uses, and that's direct holdings. So under the Australian Corporations Act, 100 shareholders of any size, so 100 shareholders with the minimum amount of shareholdings that you can actually buy on the market, which is $500, 100 of those people or institutions standing together can file what's called a shareholder resolution to a company. And a shareholder resolution can call on the company's shareholders, so their entire investment base, including these big super funds, to decide whether a member proposal that is put forward protects the company's long-term interests. And so here we see this kind of play between, or interaction between the short-term, often company executives' remuneration and incentives are dependent on short-term outcomes, but a company's investors will be looking more towards the long term. And so you can start to 100 direct shareholders in a company acting together can put forward long-term proposals for consideration at an AGM. And so we created a situation last year where we built up a team of 100 BHP shareholders, and earlier this year 100 Rio Tinto shareholders who had direct holdings in these two companies. And we facilitated those members of those companies to use the rights afforded to shareholders under Australian corporations law to make proposals around their relationship with the carbon lobby. And I don't know why, I think that's where the party happens or something. I don't quite know why I did that, but anyway, it was late last night. So the result of this, we took this, we took these resolutions to the BHP and Rio Tinto AGM. Because these companies are dual listed, these issues were discussed among European investors as well, so particularly among London-based investors, and it may not surprise you that London-based investors are far more progressive than Australian investors, or far more ambitious and willing to sort of lean into that ambition and be very outspoken about these issues. And we achieved, and it will not sound like much, but we achieved a 10% vote at BHP, and that translates to about $7 billion of capital. in favour of our resolution, and that was enough to get BHP to leave the World Coal Association. Now, BHP is still... Hooray! Now, the World Coal Association... Thanks. The World Coal Association are not the most influential group in Australia. That would be the Minerals Council of Australia. BHP have not yet left the Minerals Council of Australia. However, they did have removed their former Chief Executive, Brendan Pearson, who, for better or worse, has gone to work with the Trade Minister selling coal to Vietnam. We understand. Look, and there have been some significant structural changes at the Minerals Council. They are still a problem. We met with them in Canberra a couple of weeks ago, and as you may imagine, it was not the most friendly meeting I've ever been to. But they are certainly under a lot of pressure. So we didn't stop there. And actually, I should explain this, how the new generation of activists corners corporate boards, and they sort of talk about how we go in wearing suits and, everyone else is on the outside waving a placard. We're not nearly as effective in our suits if there's no one outside with a placard. So let me tell you, if that's your thing, keep doing it. It's really powerful, it's really important, it's really effective that companies understand how they undermine their social licence to operate by funding the coal lobby. But the second time we put this resolution, so early this year to Rio Tinto, we lined up $84 billion of global funds under management to file with us. So that included the huge Swedish pension giant AP7, who have taken a particular interest in the influence of the coal lobby on politics and policy in Australia, and I think it's very, very corrosive and damaging. We had the Church of England co-filed with us, and one Australian fund, Local Government Super, also took that decision. So I imagine there may be people who are local government super members here, given we're at a council. Anyway, they're very, very strong on these things. So we had a big, strong co-filing group, and we got 20%. So we doubled our vote on this type of resolution. And what we have seen since that time is that it's had this enormous ripple effect. So now companies are increasingly being called on by their shareholders to disclose the industry associations that they're members of, to undertake a review of the policy and advocacy positions that those associations put out, and where there is misalignment, to either change it or exit. So there are some very interesting conversations going on. BP has committed to do it, to do this kind of review. So has Shell, so has Anglo American. Locally, BlueScope and Boral have committed to doing it. Origin Energy, we have refused to make that commitment, so we've filed another resolution to them, which is going to be heard at their AGM next month. So this is an ongoing piece of work, and while the issue of climate lobbying anti-climate lobbying is certainly a very significant one, this tool is not just able to be used for that purpose. So there are, for any environmental, social or governance risk, or where those kinds of risks for companies intersect, this tool of 100 shareholders standing together to co-file a resolution can be very effective. And I also want to emphasise that activist investing, so having small strategic shareholdings that are not at their core intended to be profit-making, that sort of activist shareholding is compatible with fossil fuels divestment. So you can put your hand on your heart and say, I've divested my assets from fossil fuels and I have a small strategic shareholding in these companies, these diversified miners with some exposure to coal, for example, and those things are not incompatible. So that's our website. Before I launch into questions, I will tell you a little bit about the kinds of issues, or the Origin Energy issue that we're working on at the moment. So Origin Energy, as you know, big mining company, so extractives company, oil and gas company, as well as retailer. We're engaging with them across 3 issues at the moment. So one is their relationship with industry associations. 2 is their emissions reduction targets. So they've set a target for 14 years away that they will achieve by closing their Eraring coal-fired power station, 1 station, which in the meantime they will flog. So they will increase their emissions over the next 14 years, and eventually, you know, that their only strategy for reducing emissions that they have disclosed to their shareholders is to close this 1 coal-fired power station. And then the third basis, which I think is probably the most interesting and the most representative of the climate emergency that we now face, is around the lack of consent in place for the permits that they hold to undertake fracking in the Northern Territory on Aboriginal land. So there was a moratorium, as many of you will know, on fracking in the Northern Territory that was in place until April this year. When that moratorium was lifted in mid-April, the 2 big listed companies that are involved in fracking, there are about 30 companies, but only 2 of them are large listed Australian companies, Origin and Santos, both put out press releases that day or the day after, basically saying, we want to get in there and we want to dig all this stuff out of the ground as soon as we possibly can and sell it for heaps of money before the transition. And I mean, of course, they talk about gas as a transition fuel, and we can leave that to one side. But there really is this sense that this feeling of climate emergency, this feeling of impending decarbonisation, is not just felt within this room. It is actually very strongly felt within corporate boardrooms of Australia and all around the world. But the reaction of those corporate boardrooms is not always, well, let's do the sensible thing for the planet and decarbonise now. It's let's dig all the stuff out of the ground and sell it while we still can. And we were approached very soon after the lifting of that moratorium by some groups working in the Northern Territory known as the Protect Country Alliance. And their concerns can be summarised, in that Aboriginal people in the Northern Territory have not been afforded appropriate consultation and consent in relation to any fracking permits. So we have been in discussions with the company about this. I was up in the Northern Territory last week, and I don't know if for those of you who have been out into the remote central parts of the Territory, they are very difficult to access. The telecommunications and physical infrastructure does not facilitate easy consultation, communication and discussion, which is required in order to have a proper consent process. People need to be uncoerced and they need to be given enough information so that is appropriate culturally and scientifically. They need to have time to digest it. They need to be able to go to their communities and to make good decisions for their planet, their people and their culture. And if you go out there and just see the scale of this problem, all of the cultural and linguistic issues aside, and those issues are very, very significant, but even at the level of logistics, of scale, of space, achieving consent in the Northern Territory is very, very difficult. And so we've put a resolution to Origin asking them to disclose to their shareholders what they did to achieve consent and to commit to not doing any further exploration activity until that material is disclosed. So a very, very basic ask. And they're going to resist that. So we're on a trajectory now to discuss this issue around the Aboriginal lands and fracking and consent at their AGM. And I must say that the response we've had from the investment sector so far is very, very positive. that investors are concerned about this. And so I highlight that example. So investors take the climate emergency much more seriously now. They don't act nearly as quickly as as we would like them to act, but the actions that we require to address the climate emergency are, now they may be unusual or in some cases even antithetical to the way that global capitalism operates, but they are permissible. They are possible. And so I'll finish by saying that part of ACCR's work is, and the reason that we build civic power in capital is because we all have exposure to capital in Australia, we all have exposure to Australian equities. We think that that comes with an immense responsibility, but also because we think that change is possible. We think that investors are listening, they are changing too slowly, but if the big funds in Australia start to hear more from their members about how important this is, how urgent this is, and how responsible they are for action, we think that we will see large gains on this front in Australia in the investment space, particularly while the political space has been vacated. Thanks. I'll take questions.
Thank you so much, Bryn. I'm so pleased we've got time for questions and discussion because I love what you talk about, and I've seen you speak before on this, and I think there's a working group that'll come out of this in terms of some of the ideas that you've spoken about. There's a challenge that's been laid out for us, I think, and it's a really simple challenge, which I think we'd be negligent to not take up. So I just wanted to make that comment.
Thank you, Michael Steinville. I volunteer with Market Forces, and they do, as far as I can understand, basically exactly what you're doing. It's some of the most rewarding calling you can do. You just get investors that can't stop thanking you for actually calling them up and asking them to do this. But I'm sure I've heard them mention you. Is there an overlap? How much do you two work together, please?
Yeah, sure. So we coordinate a fair bit. Their Theory of Change. So Market Forces is another NGO based out of Friends of the Earth here in Melbourne. They do really specific climate and environment stuff, which is very focused on the science and disclosure regimes around climate and environment. Our work is a bit broader than that because we cover the human rights consequences of these things, as well as the kind of lobbying and political activity. So that there is a degree of overlap, but we try to make sure that we don't, that we're always coordinated and we're not putting the same resolution. But certainly we speak to each other, and they do very, very strong work, particularly in the banking and insurance sector.
Cool. Hi, my name's James. Great work. It's like guerrilla tactics. I'm just curious about the green bonds. Since Victoria was very forward thinking with that, and they seem to go like 24 hours and they were fully subscribed. I was just wondering if there's a chance that the blockchains technology could help boost that sector.
It sounds like you know a fair bit more about blockchain and bonds than I do. I certainly think there are enormous opportunities for this, positive investing, verification of positive impacts and so on through technology and through new financial products, and that's what we're seeing with the green bonds. So I think that will be as capital organisers around these types of things, we will see more opportunities for investors to put their money into those kinds of products.
Fantastic. Just down the back there.
Bob Hill, I just wonder if you could elaborate a little bit more on your final point where you're talking about strategies that we could use to get our superannuation funds to work with you more enthusiastically, I guess.
Yeah, great question. I mean, we're about to launch actually a tool on our website. So website is, was behind me, accr.org.au. We're going to launch a tool called Vote Your Super, and that will, with any luck, be live in the next 2 weeks. But definitely, go to our website, sign up, and you'll get an email about it when it launches. That tool will give you an idea of how all of the big industry super funds and some of the retail funds in Australia, how their policies, their policy implementation, and then their voting records on shareholder resolutions stack up. And it will also give you the opportunity and some guidance about how to send communications, so emails in general, to your super fund, asking them for information about how they are going to vote on a proposed resolution or to encourage them to do so. But look, generally, with most funds, we have a pretty good relationship now. It's sometimes a difficult one, sometimes an uncomfortable relationship that we have with large owners of capital, but we see our role as creating discomfort. We don't think that anything changes from a position of comfort. So I would encourage you all to consider how you can find out what your super fund is doing, and just asking questions is the best way, and they have a duty to respond to you. But thinking about if their responses are inadequate, thinking about how you might go about making them feel a little less comfortable.
We see our role as creating discomfort. If someone could tweet that, that'd be great. Okay, do we have any more questions or comments up the back there? Natalie, you've got someone? Fantastic.
Tony Gleeson here. Thanks for your talk, Bryn. Very informative. We're going to, we're facing a climate emergency. I guess that's why we're all here, and it's not going to be enough to get to zero emissions. We need to get way below that. And that brings up drawdown projects. I'm just wondering how close we are to the market you're talking about funding those. So a lot of that revolves around the way we manage land, farms and land. I'm just wondering if we're getting anywhere near close to farmers being funded to make the necessary transition for what they need to do.
Yeah, so great question. I was hosted by a farmer, a pastoralist in the Northern Territory last week on his big, huge cattle station, roughly the size of Greater Sydney. There's one family that lives on that cattle station. He's out in the middle of the territory, and sunlight all year round. He had a huge diesel generator, and this guy's worried about climate change, worried about fracking. He had a huge diesel generator running 24 hours a day for his refrigeration and his water pumps and so on his homestead. And it was absolutely striking that there are certainly huge gains to be made, and of course farmers need help with that transition. So look, I think we're focusing our efforts at the moment on the extractive sector and on the energy sector, and we think that those are the big parts of the economy where we're going to see the easiest cuts to emissions, the most efficient cuts to emissions. But certainly our whole economy needs to transition. Every single aspect of our economy needs to transition, and we need corporate behaviour, and we need corporate messaging back to government about how urgent that transition is. And we spend a lot of time talking to investors and companies about how they might approach those uncomfortable conversations with government. But ultimately, for transitions for people like farmers in the tougher economies, that will need economic policy, and that's why we need government at the table too. So we need to keep pushing everyone.
Before we go to our next question, I've actually got a question, Bryn, if this is okay. I've counted at least 10 local councillors in the room from different councils across the state. Local government obviously has some sway in terms of its community leadership role, but also its relationship in relation to the state local government super fund. Do you have any suggestions as to what councillors should be doing and local government workers should be doing in this space, given the economic space that they operate in?
Yeah, so I think where local government has the power to make decisions to promote renewable energy in local council areas, that's fantastic. And certainly, you know, that's the focus, or local and state government is the focus of this enormous Global Climate Action Summit that's happening in San Francisco this week. So that, you know, that local level economic and social policy is critically important. But also, I mean, I will, you know, commend local government super as being not one of the leaders, but the leader in Australia in the super sector. They are the leader on shareholder resolutions. They are the leader on aggressive action on climate. So, you know, for you guys, I think it's probably sort of saying to them, keep going. I don't think they can be complacent. They've still got further to go, and but the leadership that they show within the sector, and they have hard conversations with their peers, and that's really good. So more of the same, or even more, from local government super.
Well, I'm a bit young to have a super fund, but I know my dad has a super fund. So how do you have a website or something? How do you get involved with this?
Yeah, so...
Because he's my dad is very sort of, well, he's a retired banker, so he has a lot of financial knowledge and stuff, but how do I connect that to someone who has that knowledge but can put it into an environmental context?
Yeah, so if your dad already has a fund that's existing that invests in Australian equities, so self-managed super fund holds, you know, some shares in Rio Tinto or BHP or any of these big emitting companies, then you can go to our website. We have a database where the people who sign up to our database authorise us or give us agency to do one thing on their behalf, which is file shareholder resolutions to the companies that they nominate. And so you get control over which companies. You might like our resolutions on climate and not like our resolutions on human rights, for example. There are those people out there. They tell me about it. But you can nominate which companies that you hold that you want us to be able to engage with on your behalf. And the only thing that we can do is use your name and your shareholder identification number to file shareholder resolutions. So we can't vote on your behalf, we can't sell or buy shares on your behalf. All we can do is file shareholder resolutions. So that would be the way to do it. But you don't need a fund to do that. Many of you will have online banking accounts. Most banks in Australia have some sort of share trading facility. You can set up, and so this is, it takes the online activism a bit beyond the kind of petition signing. So it's not a totally simple ask, but the process is you set up an online trading account with your bank, which you can usually do online. Sometimes it's instantaneous. For other banks, it takes 2 days, 2 or 3 days. You set that up, you keep, you know, $500 to $1,000 in that trading account. And so this is not an option that's available to anyone. It's only available to people who have that kind of bit of cash sitting around that they can do without for a period of time. You know, of course, you hope that you get at least most of it back, sometimes with a return, but you keep that bit of money sitting in an account. You sign up to our website. When we're about to press go on a shareholder resolution, we email all of our shareholders or all of the people on our database saying, you know, we don't have enough shares in BlueScope. Would you be happy to buy $500 of shares so that we can put a shareholder resolution to them, calling on them to disclose their emissions reduction targets, for example? So that's a way that that anyone who has that amount of cash and an online trading account or an online banking account can get involved in our work. And ideally, you know, we'd have an army of 5,000 people, and we could turn the 100 shareholders around overnight. But currently, it's a very labour-intensive process.
David Hood. It's a few years since I did my AICD training, but there was no mention whatsoever of climate as a risk then. What's happening with AICD? Are they doing anything in this realm?
Well, AICD is the Australian Institute for Company Directors. Look, I think they are limited by the Broadchurch framework that they operate in. I think there's a lot of industry associations that are limited by that. I even think the IGCC, the investor group on climate change, is limited by being a member of this broad church. So, you know, their mandate is as far as their most aggressive members will let them go. Look, I do think we're seeing increasing scrutiny of director perspectives and action on climate change within corporations' law. Within directors' duties. So I think that is very powerful, and probably when company directors, so there's still heaps, and I hear from my colleagues in corporate and director world all the time that there's still, you know, at least 50% of board directors in the ASX 200 are climate deniers of some form. They're not maybe the most extreme deniers, but they're people who don't see that we have to act urgency, and that's another form of denialism, of course, given where we are. So there's at least 50% of directors that are, you know, woeful deniers. I think the thing that will change that is litigation. I'm an ex-litigator myself, so I think that the first litigation in relation to breach of directors' duties for not taking climate into account will really change things very rapidly. But that may be a way off. We have pretty timid authorities in Australia on that count. It's a good question, though. We're working on them.
Fantastic question to end this on. Can you please join me in saying a huge thank you to Bryn O'Brien from the Australasian Centre for Corporate Responsibility.